Good. Let's go, Adam.
Good morning, Bakersfield. Good morning, Zoom. Mike and Michael,
Morning.
good morning to each of you guys. Like I said, we're here in Bakersfield. We are taking our show on the road for the Buyerside Chat. It's going to be a tour of the 99. So we're starting in Bakersfield. We're going to try to go to Fresno, Hanford, Visalia. We may even stop off at my office in Porterville here. We'll kind of see where that goes. But we've done this for almost a year now. We started our first one last November. And we did this to get these guys in front of each of you. This is our first time with a live crowd. So now I'm looking at individuals versus just the camera. So get used to that one online. But we're excited to share a lot of things with you guys. We've been doing this, like I said, to get these guys in front of you to talk about what's going on in the industry, what's going on with the company, future outlooks. I'll throw some surprises there, here and there for these guys, which they never know. I told Angela earlier, my sheet of information is a little different than theirs because I put some stuff on here that I'll just randomly ask for them, and they are surprised from time to time. It's never anything bad. But yeah, like I said, last one we did was in June. And guys, what's been going on since then? Good morning to each of you.
Good morning. I think last time we were talking about 4th of July and barbecue and everybody getting ready for summer. And now we're talking about everybody getting back to school and back to work. And I think that's the shift that's happening right now. But I think, people's mindset is a little different at the end of summer this year. For those of you that have been in real estate for a couple of years or several years, we see this really big boom of business, this upswing, this surge of business during the summer. And due to interest rates or whatever noise is going out there, we didn't see it this year. So I'm looking at agents, I'm talking with agents who are struggling with their mindset, I think now more than ever. Come on. So I think that's the biggest difference that I see this year, Adam, over what we were doing last year.
Mike, what's been going on the last few months?
Yeah, I think, there are a lot of people in the industry and profession that are in shell shock right now, because obviously we didn't see, like Michael mentioned, the summer surge, the so-called spring selling season. And we really had a lackluster first half of the year numbers wise, and a lot of us are feeling that pain. And I think a lot of it was perception that was just really unchecked. And as they say, perception unchecked are people's reality. And a lot of it was noise in the news. A lot of it was noise about how tariffs are going to wreck the economy, how this is going to happen, that's going to happen. There's been a lot of fear really pushed into the marketplace, where it really froze people from making moves. Albeit, interest rate hikes didn't help. Interest rates getting back and cresting 7 again certainly wasn't pleasant when we thought they would be coming down. The Federal Reserve hasn't helped in that manner. Hopefully they do the right thing this coming month, in September, which I think they will. I think we'll see our first reduction again. Albeit we know the Fed funds rate doesn't dictate one for one or directly what happens with mortgage interest rates, but it certainly creates positive investor sentiment and a reaction that could cause mortgage rates to reduce. Thankfully, we've seen mortgage rates start to come down over the last several weeks, and the 10-year Treasury bond yield rate go down, which is what we've needed. We would have thought when the stock market had its mini crash, which I didn't think was a crash, I thought it was more of a correction. We thought, well, great. Well, now mortgage interest rates are going to come down. Let's go. I was excited, right? I was like, let's go. It's going to happen. And then nothing happens. So we see this huge decline in the stock market, and people sweating over their 401ks and their retirements, thinking, oh, it's over. It's the end of the world. And then mortgage interest rates just stay steady. Nothing happens with them. And so it's just been weird and unpredictable. I think economists are really, they're starting to develop imposter syndrome. Like, do I even know what I'm doing? Nothing's making sense within the parameters of an economic model. I think, and we're starting to already see, I think we had a lackluster first half of the year, but it wasn't because there was a lack of buyer and seller demand. People still need to sell. Doesn't matter what rates are, doesn't matter what economic conditions are, doesn't matter about tariffs, doesn't matter about inflation, doesn't matter about all these external factors, doesn't matter about wars in the Middle East. People still need to buy and sell. And I feel that we're going to see a lot of that release the second half in a delayed fashion. This month for the companies already trending as the second best month of this year in August, when kids are going back to school. So that tells you that I think we're starting to see that relief come in, and I think we're going to have a far better second half than first half.
Looking forward to that. One of the topics that we are going to discuss today is the outlook for the remainder of
Yep.
2025 and then going into 2026. Like Mike said, next month the Fed will meet again, and we're potentially going to see a rate cut. But that, like you said, also that doesn't necessarily mean there's going to be a mortgage rate. Last time they did a Fed cut, mortgage rates went up.
Yeah.
And so people have that correlation in their minds. But again, it's the signal versus the actual noise. The noise is, hey, rates are dropping, the Fed's dropping their rates. Mortgage rates, they didn't do anything. So that signal, keep an eye on that. That's something that we're going to touch on today as well. One of the things I talked with these guys about when we're discussing what we want to talk about just a couple days ago was, it was August 17th, 2025. And August 17th, 2024 was D-Day for a lot of realtors, because that was whenever NAR implemented their changes in our industry. We saw a lot of, changes, but did we really see a lot of changes for a lot of realtors who were doing business the right way? I don't think they were nearly as affected as much as people who necessarily weren't. But, let's see here. Offers of compensation were removed from the MLS. Buyer broker agreements were needed for all clients. The assumption that commissions were not negotiable became something that sellers kept hearing. So in your guys' perspective, in the last year, from how it seemed then to where we're at now, I mean, what's the biggest change that you've actually seen in the industry? Michael, we're going to start with you on this one.
Biggest change is perception. I think last year, myself included, I don't know how you guys felt about it, but there was a lot of fear and uncertainty as to what was going to happen with the buyer's broker agreement. So we started talking to our broker friends, not just in California, but in several different states. And we actually flew to a different state to go to a brokers convention of how we were going to handle this and how to properly get our agents ready. And there was a lot of fear. And there was like, what are we going to do? How are we going to represent this? That was a skill set that listing agents have always had, is how to negotiate your commission up front, but it was never a skill set that the buyer's agent had to use. The buyers always went on, I'm not going to charge you anything. I get paid from the seller on the commission side when we close a transaction. And that was kind of the mentality. It was kind of like, I'm working almost for free, which was language you were never supposed to use, but some agents were using it. And so when they had that mindset of, now I have to pre-negotiate my commission, how am I going to do it? It really was a fear set in a lot of our agents and agents nationwide. And so we've seen a lot of changes on the commission side, which we now call compensation. So I think it was just a lot of navigating, learning new skill set, learning to introduce that form, and then having the courage and the clarity and confidence to have that conversation with your buyers. I mean, it's still a difficult conversation for a lot of us, especially when you have a first-time buyer in particular who doesn't have enough money down. How are you going to navigate all of that? And so I think we're also blessed that we live in an area where we have a lot of new construction, and we can go to new construction when the funds are low and get help from the builders to get some of these first-time buyers in. Because now, if they don't have a down payment, closing costs, or if they don't have money for your commission, and if the sellers aren't willing to help, new construction is always a good way to go. So I think
I'm going to stick with you for that one for a second, because you mentioned how the compensation has actually gone up.
Yeah.
Whether it's on the buying side or the listing side there. I mean, that was kind of a follow-up that I wanted to touch on there. So agents are earning more. What's causing that? Is it just a simple conversation? Is it because they now are forced to be transparent? What's the main reason behind that?
it's twofold. Now, number one, it's gone up on prices of 500,000 or less. When you get above 500,000, from 500 to 900, actually, I have my notes right here. So from 5 to 1 million, it hasn't gone up. It stayed almost exactly the same. And when we get over $1 million in price, it's actually gone down. And so where before the listing agent pre-negotiated a commission for the buyer side, let's go to $1 million property, they might have said, hey, we're paying 2.5 or 2%. Now that it's being negotiated, we're seeing lower percentages on the very expensive properties, but on anything that's around $500,000, we've actually seen an increase. So I think it's just agents fighting to keep their commission. And it's something that, because the listing agents, when they're doing a good job of, hey, I'm going to charge you 3%, and we've seen a lot of 3.5% listings, they're setting up the seller like, hey, they're going to do it on the offer is when they're going to negotiate the buyer side. And it's really opened it up for kind of a bigger picture for the seller, and they're not fighting it as much now. But it's also because both sides are doing a better job, the listing agent and the buyer's agent.
Yeah. Mike, I've got to sit with you on a couple different sessions, whether we've gone to Sacramento, we've been in Long Beach together, sitting in since this policy has changed. What's the biggest thing that you've seen in the industry since, for the past year?
Well, I mean, everybody thought it was the end of the world, the August 17th, the day that will live in infamy, so to speak. And it really wasn't. And along that same vein, I think, the battle's won far before you ever go to the battlefield. And the preparation, really, I'll give kudos to our state association, CAR, and we've got somebody very instrumental in this room here with us today, Jeannie Radzik, that headed up the BRBC committee and created an amazing document that addressed this issue very proactively. And the amount of training that was provided by the state and this company to prepare us for this new climate and this new process really made it, I'm not going to say 100% seamless, but it made it very painless. I mean, yeah, it was tough to have those conversations to begin with buyers. Well, why am I having to sign this? Well, if you knew what to say, generally 9 times out of 10, they signed it. And the 1 time out of 10 were the buyers that weren't going to work with you anyway. They're probably going to hop from agent to agent to agent or go directly to the listing agent and make an offer. So I think it really just became just developing new skill sets and really, fighting for what our worth is in this profession, what we do, and standing our ground on what we're worth. I will say that it has weeded out a lot of unprofessional players, and we've seen a pretty good exodus from the NAR membership. You're going to see numbers here report by the end of the year, and it's not as much as some thought, but it's still quite a bit. Some of it's market driven. They're just not selling enough to pay member dues, but other things are they're just not understanding the climate and they're just deciding, hey, I just don't want to deal with this anymore, particularly if you were predominantly a buyer's agent. So I really don't think that component of it turned out to be a big deal. What I would say is that there's things that are trailing it that I'm not necessarily in favor of, like private marketing group networks that are coming out. You guys have heard all that hubbub, and Zillow basically blackballing those that don't put things into the MLS, and and then NAR mandating this change in MLS policy to allow off-market listings to be marketed.
Yeah, the clear cooperation. We touched on that just a little bit the last time, and it's evolved since then in those couple months.
Yeah, so I mean, we'll see how that pans out. I think by putting listings into private networks and excluding from the general market, it creates, in essence, antitrust problems. So the very issue that NAR is trying to avoid coming out of the settlement, you're possibly creating more issues for members. But every association's obviously going to handle that in their own way and act in the best interest of the members and make sure that we're protected and doing the right things for the client. But I think it has in some areas affected buyer compensation, buyer agent compensation, where they haven't been willing to negotiate as hard, or they're willing to give up too much to try to make the deal work. Or we're unscrupulous listing agents are already making the assumption, well, I'm going to take more and make sure my seller is only willing to pay this towards a buyer's agent, and they can take it or leave it. And then in some cases, listing agents going out and basically taking a listing with no offer of compensation to buyer's agents, which I think is just a sort of a veiled attempt at double ending the deal. And I think that's ridiculous, but we have seen it in our own markets, and those shame on those brokers out there that are playing those games. And honestly, they're going to be out of business. I mean, if they're going to operate that way, they're not going to make it. Look, guys, we need each other to succeed. This is one of the few professions anywhere in the country, number one, that's licensed, but number two, that has the level of footprint that we have nationwide and statewide, where if we don't have each other to work with, we don't succeed. We don't sell. We don't represent our clients properly. So we have to work together fluidly to make this happen.
I agree. So these guys got me really involved with the association, whether it's local MLS or whatever committees you can be a part of. Get yourselves out there and talk with people in your industry. They are colleagues of yours. We want to work together. It's going to help everything, whether you're working on a deal or anything else. I mean, with objection handlers, Mike, you did a masterclass for weeks on Mondays of objection handlers. With the BRBC coming out, like I said, last year. Were you finding agents coming to you saying, hey, how am I going to have this conversation? And now, are you having any of those conversations at all?
It's rare now. Now it's more a matter of, hey, the seller's only willing to pay this. Can I ask the rest of it for my client, that's what he has with this sign on the BRBC.
which we've seen.
Yeah, and one of the biggest things that maybe we've already forgotten about, because it has been a year, is when that went into effect, and you've seen it in Bakersfield, you've seen it almost everywhere. But there was a small group of those discount agents, you know, the ones that do everything for a discount on the listing side. We started seeing postings on social media and other places where some of those agents that work in that kind of an atmosphere were doing like, hey, I'll help you buy your house for like a flat fee that was really low. And we started seeing that for just a few months, and then that has died off. But I thought to myself, man, you're shooting yourself in the foot. That there's no way to survive doing that. And so I think that was just a part of the panic at being at a brokerage that wasn't offering the support. And so they felt like they had to discount their service to a flat fee to survive. And the reality is, I don't see that anymore. That has gone away. That started to die.
Yeah, that's a perfect segue into kind of the next thing that I wanted to talk about was the brokerage. And, you know, we're pretty resilient right now, and you guys have gone through a lot of different changes in the industry right now. And it's a worrisome time for brokers, not just here in our counties, but across the state and across the country right now. Meanwhile, you guys are kind of bucking the trend of that. You know, we're not, you know, opening up offices everywhere, but you're still growing. You're still wanting to evolve as the industry is shifting. So how are you guys, you know, positioning the company to, you know, succeed in this, you know, it's essentially a new time for real estate.
Right. I think with any great company, and our company has been in business for nearly 50 years, and Michael and I are the second owners of this company. So we've had great founders and ownership, and we picked up the baton and carried it forward. I think really looking ahead and seeing what's around the corner and making adjustments early on are important. And Michael and I have always been very conservative with how we brand the business, and you know, just even coming down to what we pay ourselves, and you know, where we invest our money. And you know, as we grow responsibly. We're not out doing crazy things and acquiring loser companies. And you know, we say no to more acquisitions than we ever say yes to. And we're blessed to have said yes to this Bakersfield acquisition back in 2017. And you guys,
How
right
big
now,
was it back then in 2017?
how big, how big?
Like there weren't that too many agents.
I think we've doubled
Yeah.
the size of the
Yeah.
agents easily, right? And volume for that
Yeah.
matter. And we weren't anywhere near the top 10. And through your great efforts, Angela leading the charge, you guys are in the top 10 in this market. And you are a profitable, successful office, guys. So congratulations to you. You guys are one of our shining stars, and often many months the shining star out of our 5 branch offices. So great job. So it was a good calculated risk we took, but the key word's calculated. Anytime we take risk, it's calculated. You know, we saw these models rising as the market was increasing since 2012. You know, it's easy to ride the wave as the wave's robust and going, but the moment it starts to break, let's see who falls first, right? And you know, it's as Warren Buffett said, you know, we'll see who's wearing you know, underwear or trunks when the tide goes down. You know, some people be caught without it, right? And you had the emergence just like we had in 2004 or 5 during those boom years of some of those that were around back then. You know, you got these emerging companies that are out recruiting on just ridiculous comp plans and discounting and trying to provide some form of full service brokerage model and patting themselves on the back for, you know, extreme growth. Those are the first to fall, and many of them have. And if they're not completely fallen, they've cut their offices, they've closed most of their offices down, because any adjustment like we've seen over the last couple of years leaves them vulnerable. We've been smart to maintain our margins, still stay competitive, and offer great comp plans. We've looked at cost cutting that didn't impact you. I don't know that really any of our cost cutting. We've done a lot of cost cutting. I mean, tens of thousands of dollars that you guys haven't seen. And that's a blessing. You know, the last thing we would ever cut is anything that impacted your ability to succeed and do business.
That's definitely the one thing that you guys have stressed upon is when it comes to cost cutting, you know, people may hear of that and immediately think something negative versus no, it's actually a positive in that because for the agents, you're not changing agents, you know, you're not telling them, hey, here was your comp plan, it's going to go up now. That's not changing here at all. It's cost cutting measures that are happening behind the scenes. It's not effective.
And it's happening out there, guys, with some larger brokerages. They're up in their comp plans. And we vowed once you join us, we're going to keep your comp plan and we've never increased anybody's comp plan since they've been with us. So that's something that we'll stick to. And I just think that just being responsible about how you run your company is important. But look, guys, it's not all about cost cutting. That's just a part of it. It's about continuing to grow during these times, because you can't just shrink and fall back. You're either growing or you're dying, right? And so we're in a climate in the brokerage side of it where you're having this divergence. So you've got, companies getting smaller boutique to survive because now they've got super low overhead and they're probably going to make it. And the broker tends to be the top producer of that model. And then we've got the brokerages that are larger getting larger and gain through profit through economies of scale. There's a no man's land, as they say, in between. And those are your brokerages that are probably in that 30 to 100 category that have brick and mortar employees, insurances, copy machine leases, all of the things that they have to have. And they're even, the brokers are even selling, but they're still not making money right now. And because the volume's back. And those are the brokerages that are in trouble. So I think we're blessed to be in a position where we've been able to scale effectively to get that economies of scale and maintain an overall manageable overhead, and then continue to grow responsibly and add great agents that need help, that were with brokerages that either had support, now they don't, or maybe they never did, but agents realizing in a tougher market climate, hey, I need more tools, resources, training, I need a powerful brand behind me, I need all those things that are going to help me succeed. I want to be on that ship that's been sailing for 50 years in any storm, and I know that thing's not going to sink. I mean, that's where I would be right now. And good times, bad times, this brand succeeds, and that's what we're blessed to be a part of.
So succeeding in this industry and this profession, Michael, like Mike said earlier, people are, we're going to see the numbers from NAR. People are getting out of the industry. What about this brokerage is going to allow people to stay in this industry and help them succeed so that they're not shying away from it?
You're going to get out of this industry and this profession what you put into it. And so if you treat this like a part-time job, you're going to struggle because you want to make a full-time income on a part-time work ethic. And I think what we're going to see, not just within the company, but you've already seen it if you're paying attention even in Bakersfield, is that as MLS dues are being paid, you're seeing a drop-off, and you're seeing a significant drop-off of people not renewing. And in large, the people that are not renewing are the ones that are doing this part-time. They have another regular full-time job and they just wanted to help a relative or a friend and get a commission. And so for a lot of years, the biggest frustration that we've had as brokers, and I know that you feel it too when you're doing a transaction, is how many of you had a transaction where the other agent doesn't show up, doesn't call you back, is unprofessional, you do both sides, you carry the transaction and they still get a commission check? If those agents, a lot of them are not going to be in the business long-term, because they just don't have the work ethic and they're going to get out. And so what we're seeing is as those agents go, the ones that are left are by and large agents that are paying more attention. And so it's really right now about focusing on your mindset, because it is tough. It is not the same. We're getting beat up from every single end, buyers, from sellers, from the vendors. You're seeing it from everywhere. And there's one thing that keeps happening, and that's inflation. And so when you go home and you look at your air conditioning, when you look at your electric bill, it's not the same that it used to be 5 years ago. It's a lot higher. And so your cost of living is higher. And so your work ethic has to go up. But unfortunately, what happens in real estate is agents continue to do the same amount of transactions because prices go up and they get a raise. And so it's about shifting your mindset into how can I get an extra transaction or two this month, not this year, but what can I push? What can I do? And changing your mindset to, if they're not working with me as a real estate agent, they're going to get a real estate agent who's not as professional as I am, and they may get taken advantage of, make it bad service. And you got to shift that mindset to where you have to do the right job for your client. You have to find an extra couple of deals. And when you do, things will open up for you. There'll be a mind shift. Mind shift change, because it has to happen. Otherwise, you're going to feel like you're being burnt out.
Yeah, I think just to piggyback on that, a positive way to look at it is as lesser professional people. And sometimes I don't want to be too derogatory, but sometimes it's bottom feeder syndrome, right? I want to do my 3 to 5 deals that fall in my lap a year. I'm going to do them horribly and create risk for myself, my clients, and my broker, but nonetheless, I'll do it. But now I don't want to pay the dues, right? Because I only did 1 deal maybe this past year. Look, the reality is, number one, through year to date, through a recent survey, 89% of buyers and sellers still use a real estate agent to do a transaction. So that hasn't backed off at all, despite all the bad spotlight of NAR and realtors, et cetera. So 89% is pretty compelling. But now guess what? As people exit, your market share for those of you that are still in the business increases. The number of opportunities increases for you, that people that are going to do business the right way and truly service the client. So I'm actually excited about that, because that only means more market share for people that are serious, and companies like us that are serious about servicing clients and getting transactions done the right way.
Michael, you touched on something, and for the Tuesday sales meeting that we had in Visalia, for those who missed it, you were touching a little bit about confidence. I know that was something you and I talked about a couple days ago, and it was, something you wanted to discuss a little bit now. So confidence in being a realtor, confidence in selling. Talk about that a little more.
Absolutely. I think what I did in the sales meeting yesterday was I pulled up the definition of confidence, and it's having to complete certainty or belief in something, right? And in real estate, I was talking to Annette this morning. I was a part-time real estate agent for 4 years. I never thought I was going to do this for a living. And when I decided to go full-time, because I had 4 years of part-time work and doing a few transactions in those 4 years, the people in my office thought that I knew what I was doing. And they never really made me attend any training. So as I went full-time, I'm like, I don't know the listing agreement. Like, I would shy away from the listing appointments. And it wasn't until I got involved with the board that I went to one of the events and I took a class with Gov. He actually was offering 2 that weekend. And I took the listing contract, how to understand it, the listing agreement, and how to understand the RPA. And as soon as I came out, I was like, well, it's kind of what I've been doing. I didn't understand it. And as soon as I came out of that, it was a real shift change for me, and it really changed my business. But I was holding myself back because I didn't have the confidence in myself. And so when people are doing business with you, I'll give you an example. How many of you have flown in the last couple of years? Anybody? On the plane? Okay. When you get on the plane, how many of you go and interview the pilot?
There's 4 people on Zoom right now who said that I see 4 hands go up right there.
And the reality is we don't, right? We think that whatever company that you're going with, my last one was Southwest, I think they've done a good job of hiring and training, that they've done all the diligent work. When you show up to an appointment, whether it's a buyer or a seller, and you have a Century 21 logo on your business card, they think you know what you're doing. In many cases, your customers, I heard some laughing in the back. In many cases, your clients have more confidence in you than you do in yourself. And so if I could give you any advice during these tough times, it would be to go back, understand the paperwork, get comfortable with it, and build up some confidence that you know that you're the right agent for them. And if you don't have that confidence, this business can and will eat you up. And so you have to build that confidence. You have to go through it. There's a book called that I recommended everybody yesterday. It's called The Obstacle is the Way. You'll read it in a day. It really is a quick read. If you're a slow reader, it'll take you 2 days. If you hate reading, it'll take you a week. But what it does is just working on your mindset that when there's something in front of you and a challenge, you just have to tackle it. And the reality is that in real estate, we have a lot of people that are attracted to real estate for the freedom of schedule and the perception of I'm going to make a lot of money. But it's a fake perception. You don't have real freedom unless you have financial freedom. And so if you don't tackle having to make the contacts, having to make the phone calls, even the one that you missed yesterday, now you feel bad about it, you have to go through it, you have to tackle it. Because if you don't, it will eat at you. And so the obstacle is the way. If you're not making a decision, if you're procrastinating, guess what? You just made a decision to procrastinate. And so just making a decision to not do something is not going to save you. You got to go in there, you got to make those, you got to make it work. You got to ask for more recommendations and referrals than ever before. You got to hit your vendors that you use all the time and say, hey, I need some referrals back this year. And just ask for the business, but just go through it. Whatever challenge you have, just tackle it head on.
That's good. So, Michael, we're going to stay on confidence for a second there. For those of you who haven't read the Quantum Real Estate Agent, available on Amazon.com now, from Mike Allen. But, everybody kind of has tipping points in the industry or wherever you're at of, what's that point? Where is that whenever it's going to change for you? When you came into real estate, you weren't expecting to, after your dad passed away, and you wanted to take over there. But when did you actually realize like you had the confidence to do this? Was there a point in there where you realized that?
Yeah, I think so. I think a lot of us get into any profession, and for some periods, maybe in the beginning or along the way, we experience imposter syndrome, where we just feel like we're not worthy, we're not good enough, we're not skilled enough to represent our clients. We're just faking it until we make it. And as I say in the book, it's not about faking it until you make it. It's about taking it until you make it, which means, just take your lumps. You're going to make mistakes, and that's okay. I mean, generally, you're not going to make such a big mistake that it's going to cost you everything. I mean, that's not, we're not doing surgery on the operating table, right? As a first year medical student. So the reality is, for you newer agents, we're here to help you succeed. And when they hire you, they hire Century 21 and our 50 years of experience and over hundreds of years combined experience if you combine all of everybody behind you. But for me, I got into the worst time to get into real estate, which was 2006. And, I got my broker's license and took over a small brokerage, which I had no business to do and did it horribly in the beginning. And, kind of got things going and grew but then the market starts crashing. And then at the end of 07 and 08, like literally, like nothing like what we're dealing with now, literally off a cliff. And, I'm freaking out and, funds in the operating account are going low and I'm putting commissions back into the business just to pay the bills, which, a lot of brokers are doing right now. But, but you just go back to fundamentals. You look at the track record and the decisions you made, and you've got to have faith in yourself. If you're not your own biggest cheerleader, you can't expect anybody else to be. You have to know that you got what it takes to succeed. I just looked back and I said, hey, I get through everything that I've ever come across adversity wise. It may not always turn out exactly what I thought it was, but we get through it. We always get through it. And the good news is about this profession and this company is we're not solopreneurs. We're entrepreneurs, but we've got people around us. And my success, and I talk about a lot in the book, is not any one thing that I did or didn't do. I was at least savvy enough to surround myself with really great people that helped elevate me along the way. And I continue to do that today. And it got me through the storm and I just kept going. In any adverse time or any type of market storms or fluctuations, there's always opportunity. We have to just stay in the game, keep moving, keep doing what we do best. There's things that we can control and things we can't. What we can control is, interacting, communicating with our clients, being in front of them, being the voice of reason, being their go-to for anything, all things real estate, and making sure that we're highly visible during these times. The agents that are doing that their numbers have not gone down. In fact, they're going up. I mean, we see it time and time again. We have many, many agents in the company that are doing extremely well right now because they're not letting the market noise paralyze them. They're using this situation to empower what they're doing and to go out and gain market share and doing what they do best. And we as a company have taken that approach. Let's just do what we do best. I mean, I wish I could go sit on the Federal Reserve Board and slap somebody, into doing the right thing. But the reality is it doesn't matter. It doesn't matter. It doesn't matter if we, finalize a tariff deal with country X over here. It doesn't matter. What matters is we can do what we can do. Run a great brokerage, help you guys succeed, add great colleagues to the family, and continue to grow and lay a stronger foundation now, because as the market swings, which I truly believe it will start swinging heavy next year, we're going to be prepared to benefit, and we're all going to be doing extremely well and much more profitable at the end of the day.
So you mentioned kind of the noise, the signal there. A couple of months back, Jordan Levine, and I think he's been going around to each association, and his presentation was called "The Signal versus the Noise." And we hear all this noise, this external. If you turn something on, whether it's the news or your cousin, your aunt, whoever it is that knows our profession better than us, they're going to tell you exactly what's going on because it's what they heard, it's what they saw online, and so it's got to be true. And what Jordan was emphasizing was, that's the noise versus the data points, which is the signal on that. So when we're talking about market updates, and that's kind of where I wanted to lead us into next, Kings County, Kern County, Fresno County, Tulare County, our inventory year over year has gone up. Like, we've seen more listings in the market, but we're hearing, hey, there's nothing for sale, or hey, it's that noise. What are you guys seeing right now in the markets?
Oh, lots of noise. You guys are already hearing it. Here's some realities. The reality is that we are getting some more inventory. But think back to last year or 2 years ago, we didn't have enough inventory. You were struggling to find the right properties for your clients. So we're getting more inventory. We're not at a danger zone yet when we have, a year worth of inventory for buyers to look at, but it is changing. And if you listen to the noise, what the noise will tell you nationwide is that the market is changing, the prices are dropping. Well, that's true for LA, that's true for San Jose, that's true for certain areas, but not for the area that we live in. And so what you really have to do is understand your local market and put that noise away. And if you're not able to have that conversation of knowing your local numbers, your buyers or sellers may not believe you. They're going to believe what they're hearing on the news. So it's about understanding your local market, your local numbers, but also, I've said it once, I'll say it again, please make new construction a part of your inventory, because right now we are seeing the inventory rise with builders. And when their inventory rises, they need to keep their subcontractors happy, and they continue to build. And what that means for your buyers and even for your sellers, if they're moving up, is an opportunity to get some really, really good deals. I was comparison pricing, and right now you can get some deals in Bakersfield for about $50,000 less than normal, because they've done some price slashing in certain neighborhoods. So really be aware of what's out there and make sure that you're looking at everything for your clients. But the noise, it's like when you're driving over the grapevine. Most of us are not listening to radio anymore through the antenna in the car, but if you are, what happens to it? It gets fuzzy, right? And right now, that's what your clients are hearing. They're hearing static, and they don't know what to decipher. They're not hearing clear signals. So you got to be that clarity for your clients. You got to be the ones that explains it to them in the way that you're confident with it and it's believable. More importantly, that it's true. So
Yeah, with that noise, so we have some exterior noise going on here. So I'm gonna have both of you speak up a little louder, make sure everybody in Zoom is hearing us
Not
there.
annoying, by the way.
Project this.
Well, I just agree with Mike. I think, again, it's that perception thing. So let's look at inventory. Inventory is up, which we needed to happen anyway. So we've crested 1 million single family home sales nationwide for the last 2 months. And so where does that put us? About 3.5 months. We're still in a seller's market. Technically, we're not trending towards a buyer's market. But the reality of it is our total available inventory is still less than it was pre-COVID. So we just happen to be at the peak point since 2020. But if you look at 2017 through 19, we're still below those levels. So the great news is we're really well positioned to service a wider client base and do more business when people finally start getting off the fence and deciding to make moves. The other thing that there is more time in the market. It hasn't gone up exponentially. I think it's gone up to about maybe 43 to 45 days on if you just average it out across the markets. But I think sellers are still not seeing reality. They're still thinking they're in a 2021 market climate, and 8 out of 10 sellers surveyed feel that the price that they agree upon or come up with in most cases they will actually get that price, when the reality is a lot won't. And we're seeing a lot more price reductions now. So the national average right now is 20% of all listings are experiencing price reductions. And California is in that boat as well. And we're in that boat in the 4 counties. So, and that's causing some issues, because obviously if you're in the market, high, it's going to sit there, right? It's just not going to get showings. It's not going to get activity. Ultimately have to cut. Our goal as real estate professionals is to price things right out of the gate or get it as close as we can. Okay, try this, but give me a commitment within X, which should be 30 days or less, that we'll do a reduction to what I'm recommending as reality, because you told me, Mr. and Mrs. Seller, you have to get this home sold and closed in the next 60 to 90 days and move to Tennessee, which seems like half of California is moving to these days. So just joking, but true. But a lot of people are exiting. And so we're seeing that price reductions happen. I think our opportunity to avert that is to be stronger during our listing presentations about what the real price is, and make sure that we're not getting the black eye and agreeing to some value that's 30, 40, 50% above what it's going to appraise for. And then they're at the end of the day blaming our marketing for why it's set on the market for the last 3 months with no showings or offers. So I look at it as an opportunity, but hey, we've got stock on the shelves, right? Whereas before the shelves were pretty darn empty. And I like that. And I think we're positioned well to really do a lot of volume here over the next year.
Say more about the rest of this year. And then before we go into next year, I mean, this year, we've talked about rates a little bit. And, if you guys are still talking to lenders, that are using that same phrase of marry the house and date the rate. They've used that phrase for the last 2 years plus.
It's played out.
On that. It's played out, and you better have married the house, because if you're still dating the rate, you're probably broken up and somebody's kicked out
Right.
of the place by now. So it's just not an accurate statement.
No,
we
it's
know
silly.
that.
It's silly. And the perception is values are going down just because we're seeing price reductions. They're not increasing at the rate they did over the last couple of years, but national average are still about 2.5% year over year. So they're not going backwards. They are actually still growing. So, you know, why people are waiting because of to save a quarter, half point if the math doesn't work. But, you know,
The math does
Yeah.
not math
Yeah.
in that at all. So for the rest of 2025, I mean, you're saying right now, you know, we're looking at just within the brokerage, it's a great month right now.
Yeah.
The second biggest one of the year. So for the next few months or so, what are you seeing? I mean, people
Mhm.
who were those fence riders, they're getting off because they know, like, hey,
Yeah.
you know, the projections for housing, people were expecting a downward trend just
Yeah.
in April, and now updated forecasts are saying, nope, it's going back up.
So I'm more bullish on, I think we're going to have a good second half. So NAR feels that we're going to end up on single family existing homes at about 4.3 million. That's 5% above last year. And then you've got your, you know, all your other people that have a say, your MBA and your Wells Fargo's and Zillows and realtor.coms that are a little more bearish on it. They're thinking more like a 1 or 2%. But I think, you know, I still think we can hit that 5% mark year over year. But we just, you know, yeah, we need some help from rates. We certainly can't have them crest back up to 7 and expect that to happen. I'm optimistic that rates will gradually come down. You know, are we going to see sub 6.5 at the end of this year? Maybe, but not much lower than that. I was really hoping in my annual report that I put out in February, I thought by the end of the year, December, we'd maybe even see a 5.9. I don't know, not impossible, but unlikely.
Yeah, you got to take the shot.
So what happened is, you know, rates come up since quantitative easing has stopped. So look, guys, COVID hit, government buys bonds, pushes rates down to 3.5. That's fictitious fairy tale. That's phony money, right? But people have in their minds that that's just way it is. That's reality. It's like, well, you obviously didn't buy a house in 1983 when the rates were like 18+%. I mean, let's get over it. That was phony. Banks don't make money at 3.5%. They lose money. So the reality is we're at decent rates. The 50-year average is still over 7%, and we're below that. We're below the 50-year average mortgage interest rates. Let's just get over it, realize what your affordability is, and make a move. You can always refi as they improve. I think rates are going to gradually come down softly, but they're not going to plummet down. Hopefully, there's nothing that would push them back up. But you know, it's been a wacky, you know, economic year, so it's, you know, I'm not saying that's impossible. I see us finishing strong the second half, guys. I really do, as long as we stay working and stay in the game, keep positive, and really handle the objections of our sellers and buyers that are waiting for no good reason. There is no good reason to wait to sell or buy a home right now. I'd like to hear the reason economically. I mean, lifestyle wise, sure, those are conditions, not objections. But if they're objecting because, well, I think I want to wait for rates to come down another half point. Okay, well, let's do the math and offset that with the projected increase in appreciation and see where your payment's going to end up. I show a model in my annual report where the seller that's waiting is going to still pay more in that scenario once they get that done. It's like, let's not wait. There's no good reason to wait. Now's the time to act before you have more competition. So,
Michael, go on.
Yeah. I want to touch on something that Mike said a little bit ago. You can't tell he's the analytical, I'm the emotional guy, right? And Susan, I was talking to one of our agents out of my site. It was Caesar. He's been in the business about 10 years now, maybe a little bit longer. And he asked me a question that Mike and I have been talking about, but it hadn't happened to me yet in the office. And that's like, hey, I have to reduce the price on a listing. How do I do it? And it's not how do you do it in the MLS, but rather how do I have that conversation with that seller? When his 10 years in the business, this is a guy, by the way, that closes about 35, 38 transactions a year. He's a go-getter. He really gets it done. This is the first time in his real estate career, about a decade long, where he's having to lower the price on the listing. And he didn't know how to have the conversation in a comfortable, confident way. And so we had a conversation and he made it happen. The property is now sold. But it makes me wonder how many of you have had to do a price reduction? And the answer is for a lot of us, we just haven't. If you've been in the business a decade or less, there hasn't been that need. And so we're committed to being available for you for those conversations, to doing training based on what you need. But it's really, we listen to our agents, because without our agents, we don't have a company. And Mike and I have always had a responsibility to you. And whenever we do a merger and acquisition, whenever we grow, whenever we recruit somebody, whenever somebody comes to the company, we have to do something that we can live with. And in the entire time that we've done this, even before we were owners, we have never gone back to an agent and raised what we want to get from them. We've never cut their commission. We've never raised their fees, not once. Now, I do got to kind of say, this is the first year where we raised the E&Os by $15. It went from $350 to $399. But how many of you had insurance on your house or your car go up in the last several years?
Homeowners.
Ours has been the same for about 15 years, never raised it, and it was a matter of we had to just to cover the premium. But we will never go back to you. We have a commitment to you to run a company that is going to be here for you long term, where you're going to be supported. And I think that as the real estate industry changes, there's going to be 2, maybe 3 kind of companies left. The small boutique ones, I think, will always be there. The ones that Mike was talking about, the very small offices where the brokers do most of the business, those will always kind of stay. But what you're going to have is you're going to have full services offices like ourselves, the franchise offices, or bigger independents. And then the rest is going to go by the wayside to either companies like ours, where they're going to merge in, or they're going to go to those online brokerages that have zero support, where you have the discount agents, where you know that you don't even want to work with that agent when they have the listing or they have a buyer's that you're dreading it. And that's the way this world is going. It's more of what's in it for me instead of what kind of value can I provide to my customers and what kind of value can I get from my brokerage. So we have a commitment to you to be here for you, to do the right training, to keep you trained and up to date on what's happening in the real estate world. But we're not going to change things on you. And all we ask is that you ask for the training that you need. Let us know what kind of noise you're hearing, because if you don't tell us, it always gets to us last. And so we talk to our agents consistently because we want to know from you. And in your case, we talk to Angela now. We're talking to Angela. But let us know. I mean, that's our commitment to you, is to have a good company that'll move forward. And I think we're poised to grow. We're not going to get rich doing this anymore. I mean, there was a time where we thought, man, maybe Mike and I can retire and let somebody else run it. It's not working. I mean, we got to stay in it because there's just not enough money in a brokerage. And so it's about providing a service. Yeah, it's providing a service and being here for you.
Yeah.
There was something to us about unifying the valley and having brokerages from Bakersfield to Fresno. This is our home. This is where we grew up. This is where we live. This is home.
Yeah.
And so we wanted to have that flexibility for our options of having that footprint of being able to do business.
And it's
in the
neat.
valley.
Yeah, I mean, I lived here as a kid for a while. So a lot of you don't know that. I went to college in Fresno and graduated from Fresno State. I mean, I've been in our markets. I've grown up around this, and it's just a blessing to be able to do business here. One other note about the market, when a client comes to you and feels that there's going to be some kind of market crash, the dots don't line up. I mean, honestly, there's no foundation for that. We're sitting right now on, $48.1 million worth of loans out there. Value in real estate. This is single family homes, and the mortgages against those are 13.3 million. I'm trillion. This is
million.
Trillion.
That's
not much, but trillion. And then there's about 34.7 trillion gap or equity. So if you go back, rewind to 2007, 8, it was almost inversed, right? And so there's so much equity. Even if you bought a home 2 years ago, and if you didn't, somehow 100% finance it, you probably have equity, particularly if you bought 5+ years ago and you haven't pulled money out to buy boats and fancy cars and things like that. But the reality is we're sitting on so much equity in this country right now that short of some external factor, it's not lining up, guys. We still have a lot of maneuverability, and so there's no pending crash. People have equity to move, and we just got to keep reminding them that it's a good move to take equity to improve your lifestyle and situation. Whether you have to expand because your family's grown, or you want to cut back because you're an empty nester, or you want to leave to your retirement home, we're here to help you with that, and it's a good time to do it.
Angela shared something with the managers, and hopefully the managers have shared it with you guys as agents now. But there's one sheet that she does to where you can send something out to a client. Bought a house in 2017, bought a house in 2018, and now what is that house valued at now? Just in the 7 years from that time, there's a good chance it's doubled in that time. So the equity that everybody's sitting on right now, There's opportunities. You have no idea what's gone on with that individual's life if you haven't kept up with them. We actually have programs that you can sign up for Client Club, to where you're staying on top of their mind. It lasts for what, 7 years?
Yeah.
Something like that.
Up to 7.
Up to 7 years. But there's opportunities out there. That equity that he is talking about, it's there. So reach out to those people that you had in the past. And if you're a newer agent, there's ways to find out. Do some farming. You can talk with a rep. You can get that information of who's sitting there on that equity. You can look up in your MLS that address. Hey, it sold then. This is what it could potentially be worth now. Find a way to get those clients back. I mean, it's there. It's there. That equity is there for people.
I bought in 17 and my house has double in value. Like literally I could sell it for double what I paid for it in 17. So that's a true statement.
It's like that across the valley.
That's a good marketing target. If you guys sold somebody something 5 to 7 years ago, that'd be a great target to start those conversations. Are you still loving your home and just checking in? Sorry, I haven't talked to you in a while, or send them an unsolicited CMA. It doesn't take much. Just pop it over. Moxie works. Moxie present. Here you go. Here's what your home's worth today. A lot of them don't know. We think that sellers are sitting around knowing exactly what their homes are worth. They have no perspective sometimes. They really don't until somebody tells them.
Most people don't know until they ask. I mean, if anybody's dealing with first-time home buyers, for instance, a lot of times they don't know where to start. And so we have to guide them through that way. Same thing with people who bought their first home. They may have an idea. They look on Zillow to kind of see what their home is worth. Is that the actual value? Well, if they're talking to you as a realtor, guess what? You can give them that approximate value and it'll be easier for them. We got a few more minutes and I wanted to touch on AI real quick, even though we can't talk about it real quick, but we're still going to touch on it for a minute. Yeah, it is a rabbit hole. So we'll kind of limit it there of it, but there's prop tech is everywhere right now. If you go to any conference, if you get any emails, whatever housing subscription service you're signed up on, you're going to see something about prop tech that goes on. I received 2 emails today. One of them was legitimately titled prop tech. I think that came from Inman. But there's a lot of tools that people are using. We have some within our brokerage that Century 21 provides as a platform. But what are you seeing? I mean, what's the easiest way, Michael, I'm going to ask you, the tangible way that you've seen, AI help make an agent's business more successful, more productive?
I'll try to keep it quick. Tired of the noise personally of AI. Everywhere I click, everywhere I go, everywhere I hear it. And so if you're feeling like me, like, what do you believe? What can you do? It's just everywhere. And so AI is something you have to wrap your head around, whether you believe in it or want to use it or not, because it's being used on you now. Any of you that have social media, the algorithms are now controlled by AI. Now when you're interacting with apps on your phone or places you like to shop, most of them are controlled by AI. And so it's something that you have to start understanding in a way, getting used to using. It's estimated that from NAR, actually, 82% of agents are already using AI for the purpose of property descriptions. That is a very quick, very easy way to use it. But I think what it will happen in the future is if you get comfortable with using it in different areas, it'll free up your time. Because now you don't have to spend 10, 15 minutes if you're not a writer coming up with a description. You put in some bullet points and it comes back much, much quicker. So I think AI, for those of you that will use it, will allow you to buy some of your time back. Well, it's not even buying, it's giving it to you because most of these subscriptions are so cheap. So just start getting used to it because you don't want to be left out. AI is being used on you, whether you realize it or not. And so get comfortable with the idea of using AI to be more efficient in your business because it's something you can't stop. It's going to continue to go, and not all AIs are the same. They're not all something that's going to do an email and a text for you. There are some that are just very particular that are only based on making you a website, right? There's some that are so specific. So just get used to the idea, use it to your benefit. But if you don't use it, you'll be spending 40 hours working with the person next to you, so spend 20 hours getting the same results.
Yeah, I think a lot of people are afraid of AI. They're afraid of being replaced by AI, and they've watched too much Terminator and iRobot and Blade Runner and things like that. But the reality is AI is far off from being self-aware and having true empathy. And that's something that a realtor, they can't be replaced. That empathy, that EQ, that person-to-person relationship, face-to-face interaction, showing that you truly care. Bonding, it's hard to bond with a machine, even though they can develop androids that look like us down the road. We're far off from that. You're still going to be able to spot an android, right, versus us. But the reality is AI will replace certain jobs. For us, it's not about being replaced by AI, but what you could be replaced with are agents that are using AI far more effectively and able to leverage their business. And if you're not at some point, you may be behind in the race. So rather than be afraid of it and be on the bleeding edge, let's get you on the leading edge. And that's something that we are committed to. And we've had Bob focus on a lot. There's too many platforms to figure out who the front runner or the horse you got to run with is. We're trying to distill it, get it down to the things that are meaningful for you guys to use that can help you. I use Chat GPT like a lot of you. They just released 5.0. It's faster, it's bigger, bolder, faster, better. All these things, seems smarter, seems to know more about me all of a sudden. I mean, it's scary, but let me tell you something. I use it as I have a personal assistant, but I consider it another personal assistant. I will tell you with absolute fact that Chat has cost our attorneys, because we do a lot of legal stuff, tens of thousands of dollars over the last 2 to 3 years that I would have contacted, had a discussion with attorney, had them draft a letter. Just to draft a letter with attorney, it's $450 to $1,000 just to have them do it. And Chat has done it effectively. And so I'm finding ways that it can leverage my time. It can make what I do more effective, correct my mistakes, analyze data. Let me give you an example. I was doing a presentation several months ago at Fresno State. It was a book reading for my book that I got invited to do there, and I hadn't done one before. And I was like, okay, Chat, help me put together an outline for this book reading, what I should touch on, what I should do, the format. And I uploaded the PDF copy of my book into Chat, say, read my book and then give me this outline. It did it in 5 seconds. It read the book and produced an outline in 5 seconds. And I looked at the outline, I tweaked a couple things and ran with it. It was that I would have spent probably 2 hours coming up with this outline and format, what I was going to say, so figure out how it could save you time. And here's the thing I will say, because prompts, the better you prompt it, the more effective as far as the interactive AI's sources go. But don't be afraid to ask for ridiculous things, because I think a lot of us are like, I could never help you with that. Try it. Seriously, it can sometimes, and it blows you away. With that being said, my disclaimer is make sure the data that's being put out there is accurate, because it still hallucinates. It's still like marketing descriptions. Sometimes it still violates fair housing practice. You got to make sure that it's in alignment with our RESO requirements, things like that. So don't just take it and use it. It's like using it to print it, to come up with a term paper and then just turn the paper in without reading it and then hoping it, read the paper, please. Right.
And Chat now, and a lot of the programs, they have that disclaimer on the bottom. Right. Before you start anything, it will tell you mistakes can happen. Don't rely solely on this. Make sure you're doing your research. But
not perfect.
It's not perfect. It's ever evolving. We've just seen it evolve so much. It's had a great progression over these last couple of years or so versus the last 30 years. And what we're going to see over the next 25 years, the next 3 years, the next 5 years as well, it's going to be, it's still going to be this progression. But what it's done in the last few years has been monumental for the industry. And it's something that, like you guys said, realtors need to get involved with it. And if you're not using it, if Mike's not using it, he's going to spend a lot more time than a person like me who is using it. And all of a sudden, I'm going to run laps around him. We got a couple minutes, Mike. I know you want to touch on that. Go ahead.
I will say that when I heard Mike tell that story, because I heard that story about him doing that book and how quickly he did it for him, I went online and mine took like 3 minutes, but I had the free version, so I got a subscription. It is a lot faster. I'm just being honest. I was being cheap. I didn't want to pay the subscription. He's paying for it. I don't need it. He's doing the legal letters, but there is a difference, and it is extremely faster when you pay for the subscription. I got the base plan, and it works great. Here's a warning that I want to give you. How many of you over the last several years have had a customer call you with a Zillow value and it's like, well, right?
Hands go up on Zoom.
Yeah, it's everywhere. So here's what's happening with that is AI didn't exist in the way that it does now. And the issue that you still see to this day from a realtor.com or a Zillow or any of them where your customers are going to look at values is if you have a neighborhood that's right next to the country club or right next to Highgate or right next to any of the nice neighborhoods and they happen to be in the neighborhood next to it, but not in that neighborhood, it doesn't know how to separate those values. And so it's coming up confused. You will see where AI input will start to correct those things. And all of a sudden you're going to start seeing values. And we're not talking the next 5 years. We're talking like possibly next year. You're going to start seeing where it's going to be more and more accurate And what's going to happen there is when your customer asks you and you can't give them an answer that's somewhere in the ballpark, they're not going to believe you. And so it is your time right now to learn it, to get ahead of it, because your customers are going to use it and they're going to question you, not to whether they know what you're doing, is they just believe they believe what's in here. And so get used to the idea of it. Get used to understanding your numbers now more than ever. You got to be a professional real estate agent, and you have to understand your local market now more than ever. And that's going to continue to get better and stronger, and your competition through AI is going to be better and stronger. So understand your numbers. AI is not going to go away, but make it, your assistant and get used to it as opposed to fighting it, because it's not going away.
We're getting the flashing light here on the
Yeah.
camera saying that our time is wrapping up. But it's a little after 11 o'clock or so, guys. Final thoughts. I'm excited that we've got this crew here in Bakersfield. Thank you so much for everybody online as well. Final thoughts, guys, before we close this up, and then we're going to do a little Q&A here. Don't worry, every officer, you guys will have the same opportunity. But Michael, take it away here.
Get confident at what you do, get better at your skill set, learn your market. Nobody can ever replace you. I don't care. Computers will never replace you. Technology or an app won't replace you, but you have to be a professional and you have to know your market. I'll leave you with that.
Yeah, I just say ignore the noise, ignore the media, ignore the naysayers, get in the game, be more visible and active than ever. There are people that need help, a lot of people, and we want to be the company that's there to help them. So just keep going. And then if you guys need help, we are here for you in any capacity. Don't hesitate to call, text, send a smoke signal, whatever you prefer. We respond to everything, but we are here to help you win. That's our number one job. Michael and I, we don't sell. We have you guys, we live vicariously through your success. So we want to help you succeed at the highest level.
Perfect. Well, thank you guys so much. Thank you for everybody here for joining us. Thank you to those who joined us online and Zoom. If you're in one of the offices watching in a conference room, talk amongst yourselves, talk with your colleagues, talk with your fellow realtors. We want you to be in the office because that's where you can make deals happen, guys. Mike and Michael, thank you very much to everybody on Zoom. We'll do this again pretty soon. We don't have the exact date for the next one, but there's a good chance the roadshow will continue up the 99. We'll be at one of your offices next. Thank you all. We're signing off now. Thanks, guys.
Now it's just your show. So whatever, thank you. So whatever questions you guys have.